Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big announcement in the Bitcoin mining sector this morning with Cipher Mining officially inking a colocation hyperscale contract in the form of Fluidstack Google. We're going to be reviewing this in today's video, comparing and contrasting it to the deal we saw with TeraWulf. In addition to that, some news out from CleanSpark. We've got a lot to talk about. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. Let us know in the comment section below which of these two companies, Cipher or TeraWulf, got the better deal in your opinion and why. With that being said, let's get into today's video. All right, guys, away we go. Thursday afternoon, a very interesting day in the market. We put out a podcast about 17 hours ago, Anthony, entitled Next Deal ? With a picture of the state of Texas. It didn't take very long. It appears Cipher has won that race. You put out a tweet yesterday. Cipher happened to be the first ticker in the line as well. Lo and behold, we wake up today, Fluidstack Google inked a deal with Cipher Mining.
Yeah, so literally 16 hours after releasing that podcast, we had the update, and I watched it go through live because I noticed the Cipher share price rallying all the way up to $17 really quickly before market even opens. This is pre-market, so I'm in the UK. They're middle of the morning, so obviously everyone in North America is fast asleep. And yeah, the price was going ballistic. I even called my wife to say, God, look at this price here. It's gone from $14 all the way. It's nearly $18 in the space of 2 minutes. And so I put I had to find out what was going on. Something had to be announced. And lo and behold, their SEC filing was there. The announcement there for this 10-year deal with Fluidstack, 168 megawatts of compute power. So this is the compute power. They'll have an ancillary power on top of that to support 168. But this is securing approximately $3 billion in contracted revenue. And there's potential extensions of 10 years that could bring the value to $7 billion.
Now, you just mentioned the total critical IT load coming in at 168 megawatts, the gross capacity 244 megawatts. We've talked about this PUE ratio on the channel before. If you divide this out, you essentially get a 1.45. So at the higher end of the PUE or power usage effectiveness ratio. I did want to throw that out before we get into the contract details here, but Cipher has come out with a great deck today. Why don't you walk us through some of the high level numbers here, Anthony?
Yeah, I mean, as I've already explained there, $3 billion contract over that initial 10-year term. That's $300 million per year. $7 billion of contract value if the 2 5-year extension options are exercised. And incorporated into that, which we haven't gone into in detail because we don't know the escalators, are the modified gross lease and annual escalators. So this will be sort of like effectively giving it some sort of inflation proof. As prices rise, therefore revenues will rise in accordance. This is where it gets interesting now. The expected site net operating income. Now, net operating income really means after all costs. The margins we're talking about here, 80 to 85%. Now, they are similar to what we've seen with other peer miners out there, around about the 80%. Some have said it as high as 85%. Obviously, time will tell as to whether they achieve those. But when you're looking at these types of contracts, pretty much everything's in place. You're not having to sort of like work out too many details. There'll be some nuances when you're actually in operations, but not too much. So they can really fairly accurately calculate these. Now, in terms of project costs, $9 to $11 million per megawatt. And if you look at that 168 megawatt deal there, that takes it to about $1.5 billion. So for all the retail investors out there who think this contract is just going to pay the likes of Cipher, $3 billion over the next 10 years term without having to invest in infrastructure, need to really rethink how they're going to do that. It's going to cost them, $1.5 billion to build those facilities in readiness for 2026 to hand over that site then for the likes of Fluidstack to utilize. Now, Google, who also provided a backstop to TeraWulf, have done exactly the same for Fluidstack. 1.4 billion, they're going to support the lease obligations in terms of the project-related debt. So they'll cover any of those issues there. But for that, they've took 5.4% ownership, subject to adjustments and potential cash settlement under certain circumstances with Cipher. So we'll talk a little bit more about what that 5.4% means, but that's not unusual as well. We saw that again in the TeraWulf deal with Fluidstack. Google took, I think it was about 14% during that deal, and we'll have a look at how that compares in the numbers when we get to that during the podcast. And excluding the contracted megawatts for Fluidstack, Cipher also happens to have a growing pipeline of approximately 2.4 gigawatts prioritized for HPC, and we've covered a lot of those sites in Texas in our previous podcast.
Yeah, we certainly have. Now, we're going to get into some of the comparative analytics in a second here, but I did want to spend a few minutes on these updated slides. The next one entitled Compelling Strategic and Financial Rationale. You can see they give a nice little breakdown now in terms of their portfolio, about 37% HPC AI in terms of their pro forma megawatt mix. That leaves about 63% currently for Bitcoin mining. So we did want to stress this is really just the first of many expected HPC announcements. They talk about the fact they have 7 sites that could be suitable for HPC AI compute, really following along with the narrative we've heard here, inking Cipher as a credible player in the hyperscaler realm, diversifying their revenue mix, strengthening this relationship with both Fluidstack and Google, some of the largest companies in the world. And then finally, complementing this current pipeline, again, which we expect to continue to grow and evolve in the HPC space. Now, in terms of their strategy here, you just mentioned the 2.4 gigawatt pipeline. You can see they specifically call out these 7 sites and give us a great look at the Texas map, all of the sites combined, and a breakdown of where each project is in terms of readiness.
Yeah, and one thing we do know about, high performance compute, it's not just about the energy requirement, it's also about the size and locality of these sites. And if you look at Cipher, majority of these sites all based in Texas there, you have current operational sites there, 477 megawatts, covering a total of 107 acres. Now, under development for 2025, there's an additional 450 megawatts of power, supported by 622 acres of total land supporting that. And then powered land for 2026-27, that's an extra 170 megawatts, 305 acres. And the queue capacity, this is sort of like, some of these sites that are have options on at the moment, that can come into favor once, the first sites are taken up. 2,000 megawatts total capacity with nearly 900 acres available for that as well. So there are obviously thinking, future. Today's contract is the first, it's not the biggest contract, but it's the first contract out there. And you would expect companies like Cipher, we've been talking about them for a long time now, to start building up from that deal and growing, significant, just like we saw TeraWulf. TeraWulf started with a 60 megawatt deal and now have significantly higher. They have 360 megawatts alone with Fluidstack and 60 megawatts with Core 42. So they've got 420 megawatts of compute. So from initial 60 to 420, that's a sizable jump there. And we expect Cipher and a number of other miners to do exactly the same.
Yeah, I should really say, look at this as a starting point, not an ending point in the Cipher story. Now, you talked about financing the infrastructure. This is obviously not a free contract. About $1.5 billion worth of money is going to be needed to build out these data centers. That really leads nicely into the next announcement out from Cipher today, talking about obtaining some of this funding.
Yeah, and the fact that Cipher's share price has rallied significantly. Remember, go back to the likes of April. I think the share price was maybe in the $2 range, and today it was as high as nearly $18 range there. When it's grown that high and the market capitalization is still over $5 billion, it gives them additional levers internally to use. But here we've seen this announcement today, a private offering of $800 million. of 0% convertible senior notes. Now, we don't know the pricing of this. It's going to come out later today. But this is the first part of growing that capital war chest to deliver this contract. 1.5 billion is going to have to be sourced from somewhere. The first, half of it is coming from this convertible note. And with the market capitalization over 5 billion, maybe they use some of the ATM to deliver the rest of it. I mean, it would be far easier now when your company's valued at 5 billion to raise another $700 million to fulfill that requirement than it is when your company's valued at $1 billion. That's the challenge that some of the other miners have. So Cipher, if you look at what Bitfarms are trying to do, they're over $1 billion now. But it's far more challenging as a billion-dollar company to raise significant funding internally to deliver these type of contracts than it is for a company that's valued 5 times more than them. And that's happened really, really quickly. So I'm hoping that, maybe they've made good use of the fact that the share price is at a level now where they could be also creating that additional war chest to meet that 1.5 billion refurbishment cost for that site.
You're quite right there, Anthony, and it would be great to sell some shares into strength. Now, in terms of share price, this one's been very volatile. You mentioned this morning when you woke up, you were watching Cipher up near $17, $18. It's pulled back tremendously. If we look at the day chart here, you talk about volatility in the Bitcoin mining space. Case in point, Cipher.
Yeah, I was, as I say, I was mid-morning for me this morning when the share price started to rocket, and it actually reached an intraday high of $17.48. Now, as soon as it got to $17.48, the share price started to come down quickly, and it came down very quickly. In fact, it came all the way down to $11.93 before it started to move back up into the $12 range. So actually, the share price is still down now 10% on where it was at the start of or the end of yesterday. And that's a bit of a head scratcher. And I'm assuming that a lot of that is related to the fact that this 800 convertible note has put some retail investors thinking this is a challenge. Well, actually, we've just articulated they need that funding. They need to deliver this contract. This contract will be bringing in 85% of that $300 million of revenue year by year for the next effectively 20 years. And so, and this is the first part of it. The company could be growing and growing and growing in terms of additional contract. Remember, there's already looking at Barbara Lake, which is a 300 megawatt site, which will house this deal, getting a 500 megawatt extension to that. So, if they're already talking about extension, what's the chances of Fluidstack building out that space there, or having that space built out for them to deliver a bigger contract in one location? I think exactly what they've done with TeraWulf, that will be on the cards. And this might be the first of what we call a domino effect of additional contracts coming into play. Not necessarily giving any more increase in profit, but certainly giving them the opportunity to deliver this contract at similar pricing increases based on performance.
Yeah, and we saw the same thing with the Core Scientific, Core Weave deal and the Galaxy deals, continuous upsizing or option expansion there. So we would expect something similar. Now, we want to start comparing this deal to what we saw with TeraWulf. Again, they signed Fluidstack backed by Google as well. We'll brush off some of the details here quickly from the TeraWulf deck, and then we can get into your comparative table.
Yeah, so Fluidstack's deal with Google, I mean, that's started at 200 megawatts, increased to 360 megawatts critical IT load. That's a 6.7 billion contract over the initial 10 years with, again, 10-year of extension options, which could add an additional 9 billion in revenue. And in terms of the backstop from Google, they're going to provide 3.2 billion backstop support in terms of obligations for the project debt, but they've taken a structured 14% stake in TeraWulf, and effectively TeraWulf have given Google that 14% without any cost. But having that name backing the company, as Patrick clearly stated on the podcast, it just opens so many doors. When you're having conversations about funding, about raising capital, and you put Google's name into the equation, there are less conversations in terms of asking you further details. It pretty much guarantees your funding over that period of the contract.
So with that being said, now we wanted to look at the deals side by side. If we bring up your table here, Anthony, based on what you can see, how do these deals stack up?
Yeah, they stack up fairly well, to be honest with you. Both have an initial term of 10 years. We've already talked about the Cipher, 168. This is the initial deal, probably potential to expand that. TeraWulf already expanded their deal with Fluidstack up to 360 megawatts. Contracted revenues, 3 billion for the 10 years versus 6.7 billion. And there's an extension option for additional revenues there. 9 billion for TeraWulf and 4 billion for Cipher Mining. In terms of what that looks like from a revenues per megawatt perspective, so we look at the megawatts, which is the lowest common denominator here when we're dealing with two companies for comparison. And so, yeah, so revenues per megawatt for Cipher, 17.8 million versus TeraWulf, 18.6 million.
Yeah, and just worth noting there, that's based on the critical IT load, not the overall contracted megawatts. So that's where the PUE comes into play here, and again, could alter that revenue per megawatt on an overall basis.
Yeah, this is only about the actual critical IT megawatt, so that was the easiest way to do it when we don't have all the information available. In terms of margins, very much similar, 80 to 85% for Cipher Mining, 85% for TeraWulf. I mean, the thing now with these deals is they're so transparent that everybody knows what everybody else is getting, so you already have a sort of a certain starting point, and that's why you expect them to be fairly similar. Because of the size of the deals, the Google backstop is slightly less for Cipher Mining at the moment. It's for TeraWulf, 1.4 billion against that 168 megawatts versus 3.2 billion against the 360 megawatts. Now, the equity stake is also reflective of the fact that, Cipher Mining is a smaller deal there. 5.4% of the company's valuation will effectively be held by Google, and they'll receive warrants for that. And in the same way, TeraWulf have given effectively 14% of the company to Google, supporting that Google backstop of 3.2 billion. If we look at that from the value of the equity stake by the megawatts, the critical IT megawatts in the contract, that works out at 1.6 million per megawatt for Cipher and 1.7 million per megawatt for TeraWulf. And finally, estimated project cost, slightly more expensive for Cipher Mine there. It's going to spend between 9 and 11 million per megawatt. That's about $1.5 billion to complete that site there. And with regards to TeraWulf, 8 to 10 million per megawatt. That's going to be around the $3.6 billion to deliver their facilities up in New York State.
Yeah, this is just phenomenal. Great to see side by side. Now, in terms of the value equity stake by megawatt, how would you describe that, Anthony? Essentially, for every megawatt of critical IT, this is the value at today's price that Google is getting in these companies?
Yeah, at today's price, that's what they're actually getting there. So very much similar. There's lots of ways you can show this, but I thought as it's both projects are by megawatts, let's look at that, how that compares. And if we wanted to look at it via, market capitalization, effectively Cipher Mining are giving somewhere in the region of $266 million of their company in terms of value, and TeraWulf are giving $627 million in terms of value of their company, but that's a significantly bigger contract there. If you look at it, it's probably nearly more than twice the amount, and the amount that they're giving is more than twice the amount. So again, it looks like it depends on the size of the contract, how much of negotiating have Google been doing to receive some equity in both of those companies, because they effectively are providing some security and also providing some really good open doors to deliver the funding. I mean, that convertible note at 0% there already tells you that the market quite like that deal.
Yeah, they certainly do. My head just wonders, how many companies does Google have a stake in like this from all the M&A they've done over the decades? But a phenomenal deal for both of these companies. As you say, very similar on a per megawatt basis. We'd love to hear your thoughts in the comment section below. Which company do you think got the better deal overall? based on what's available at this time. Now, the next portion of today's video, we wanted to talk about CleanSpark raising some money as well. But an interesting tweet this morning from Mike Alfred. He was listening along to Cipher Mining and Tyler Page talking about this Fluidstack deal. Tyler, for the first time, acknowledging that they may be looking to plug in some of their own GPUs. Now, interestingly enough, Mike Alfred had dinner with the CEO of CleanSpark last night, Matt Schultz. He said CleanSpark may be looking to do something similar as well. So this is kind of the precursor or sets the stage for this next PR from CleanSpark.
Yeah, absolutely. More and more as the announcements come out from CleanSpark, you can see now they've 180-degree fully turned towards HPC. They see what the market has given, the rest of the mining community. I mean, you just look at IREN's share price and market capitalization. Last year CleanSpark probably had a value 4 times IREN. This year, IREN have a value of 4 times CleanSpark effectively. So. It's come at a sort of later than most of the miners, but probably not too late. They do have some sites that maybe appeal to high performance compute contracts, and this is just another way of building up that chest of finance, ready to look to put some of their power towards HPC. So this deal today, this 100 million Bitcoin backed credit facility with 2 Prime, is an addition to other deals and gives them now effectively a total collateralized lending of 400 million, which will give them an ability to accelerate their growth now. One thing CleanSpark can do is they can raise capital. They've also said when the share price reaches $20, they'll also look to use the ATM again. Well, at the moment, it's not quite $20, but, not massive mile away. And share prices, the way they've moved over the last 2 months, it could be in a matter of months before they start to be able to use that as well as another lever. But good to see that they're able to do this. Bear in mind as well, what differentiates CleanSpark from IREN is they've got 13,000 Bitcoin on the balance sheet. So, there's no reason why they couldn't use more of that to deliver more capital funding. They might even sell some Bitcoin. They might even raise more Bitcoin-backed loans. Now they've started to do this in great effect. And they have a significant amount of Bitcoin left where they can still utilize that for each and every opportunity.
You're definitely right there. Similar to Mara starting to put this stack to work again with 2 Prime in this situation. We've also seen Coinbase involved in a lot of these Bitcoin backed loans as well. And interested to see how that HPC plan progresses. Now, a couple housekeeping items we did want to touch on here. The hash rate forward curve, this one not looking great for the Bitcoin miners. We were talking just a few months ago about $60 getting up into the low 60s. Now the high point here is 50. If you project out over the next few months, we're getting into the low 40s in the early months of next year. This really underscores why so many of these miners are pivoting to HPC.
Yeah, this is a real challenge for miners. Even at $50 a terahash, it is proving to be a challenge. I mean, we'd want it to be $60 a terahash, which was not too long ago, probably just over a month ago. It was at that range, $60 hash price. But this future target of $42, that's going to put a lot of these miners under severe issues there. Maybe not the ones with the lowest power and the most efficient mining fleets, but only accounts for a handful of the public miners in North America. The rest of them are going to have a real challenge delivering any real margins to cover all their costs, not just selected costs that some of them like to choose from. So this is going to be a problem unless the Bitcoin price rallies. Today we've seen it at $111,000, which again is a pullback from yesterday. And we know there was some selling from one of the large ETFs over the last few days, but apparently yesterday there was more Bitcoin brought into the ETF. So again, whether this is some sort of a delay or just sentiment, maybe the fact that the Bitcoin price has been dropping, in a more downward trend lately than previously.
Not a lot of optimism looking forward in the Bitcoin price. I would have expected it to be higher at this point. I think I put in 188 on my Miner Madness pick. I was hoping for that big breakout, but potentially have to wait a few more months. Now, speaking of Miner Madness, only a few more days left in this competition. We've seen a shakeup on the leaderboard. It used to be dominated by IREN, Cipher. It seems our good friend Soluna has made its way into the top 10 as well, with many of the names having that as their first selection.
Yeah, I mean, Soluna's had a phenomenal. If you look at Soluna just from a weekly perspective, it's up 200%. So anybody that selected Soluna in their top three is effectively in the top portion of the leaderboard there. And Stuart B, who's leading at the moment, his total value now is just over $1,000, $1,015. Bear in mind, this is on an investment of $300, so a nice 238% gain. Our good friend Karma Sutra, who's one of the analysts, he's had to move down to seventh place. No real shame there. $805 return. So that's a $505 return on these 300 investments, 168%. I mean, anybody who selected pretty much all the miners in this last quarter would be doing really, really well. What we hope for is maybe the next quarter will miners be able to outperform the leaderboard. So that's going to be interesting. But yeah, great. Hats off to Stuart B. Will he be able to last till the end of the month? That's the question now. I wouldn't quite start getting your sizes ready, Stuart. There may be a few more days, few more iterations of miners out there with price changes, news coming through every day. But you look to be in a really good spot at the moment. You've got about $40 on the second place member of the competition. And so let's see how it goes at the end of the month.
Yeah, an exciting competition here. Now we're humming and hawing what to do with Miner Madness 5.0 if we take a little bit of a breather, if we shake it up. So let us know in the comment section below if you're still enjoying the Miner Madness competition. And if you have any ideas to kind of freshen this up for the fifth now iteration or quarterly investing competition. But congrats to everyone. And again, as you say, really a phenomenal competition over the last 3 months, regardless of what you placed in terms of the leaderboard. The final note here, you guys, newsletter sign up. Tomorrow is Friday, obviously. We put out a weekly newsletter. It's 100% free. There's some proprietary or unique data insights in there. We do some feature the various different miners and members of leadership at these companies. So if you'd like some behind the scenes access, again, 100% free, delivered to your mailbox, and a great opportunity there to sign up on the website. With that being said, let us know your thoughts on the Cipher deal in the comment section below. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.